Hi, this is Kerry Artac with Artac Advisory. This video blog, which you find on the vlog section of my website, was recorded on Thursday, October 15th. And it's an update really on the corn futures market. And I'm going to get to that in just a second. But first, I want to take you to my website. You've probably been there. It is the vlog. You may have gone there just by virtue of watching this right now, where I have a series of videos, including this one. At the bottom of it, feel free to fill out that free trial form. If you've been a former subscriber or a former free trialer, I am more than happy to set you up with another 1 to 2 weeks, depending on how recent your subscription was. If you've been with me for the last 6 months, then it'll be 1 week. But if it's beyond 6 months, you get 2 weeks. No questions asked. Let's jump back to the corn futures. If we go back to last March, you can see here we had a meaningful long-term sell signal that played out for 3 to 5 weeks. We broke into the low $3 area, consolidated for a while, retested this channel bottom, and then in September, the beginning of September, actually closed back above it. And that, for me, a failure to follow through on a long-term sell signal, in other words, rejecting a long-term sell signal, is in itself a valid mid to longer term buy signal. First target being 407 and a quarter, which I've been writing about now for weeks. We are almost there. And ultimately, this 465 half longer term channel structure in reach as we continue into spring, summer of 2021. So 365 and a quarter is our support. This is for the month of October. Rises at 366 and a quarter, by the way, in November. Anticipating 407 and a quarter, which is really nothing more. Well, there's a couple things going on here. A 50% retracement, AB, which is the 19 high to the 20 low, and also the low of the 19 high was 407 even. You also have some old precedent here for monthly highs and lows in the low $4 area. So 407 and a quarter on the way up to what could be a 465 half overall target. Can contain 407 and a quarter, can contain buying through the rest of the year, through the balance of December contract life. And from here, the market could fall back into the mid 360s again over the next month or two of activity. Let me show you something in the interim. Recently, 2 or 3 weeks ago, we settled. This is a weekly continuation chart, by the way, and it does reflect the DC20 contract, which is what we're talking about. We did push through this this rough convergence of two different channel formations, two different channel tops. One is a longer term one coming down. The other one is coming up. It is really the average price in next week, the week of Monday, October 19th, is 375 half. It's really 374 half to 376 half, but I like to average them when they're that close. 375 half is your base of support now through the rest of October, and above which 2 to 3 week target at 407 and a quarter, which is what I've been talking about in my newsletters. Once again, 407 and a quarter, primarily a Fibonacci retracement level. Also, Dow theory is a 50% retracement level, an area that can contain monthly, possibly seasonal buying pressures. If we close above 407 and a quarter at the end of any week, and it might actually happen tomorrow, Friday, October 16th. I'm not expecting it, but if it does, once again, now we've got another 2 to 3, 3 to 5 month bullish continuation to 465 half. This channel structure can contain buying through next summer, and from here the market can fall back, consolidate again. We've been in about a 5-year consolidation pattern, truly. And so that will end, by the way, if we were to settle any week or followed by any month lease settlement above the 465 half channel top. We are a long way from that. I'm just giving you the heads up. If you're curious as to what is the signal into summer of 2021 in terms of a runaway bull market that would be incredibly impressive, that would be a weekly or monthly settlement above 465 half. Until then, we could continue trading inside this low $3 area, call it 310 to 465 half through 2021. This area, 365 and a quarter to 407 and a quarter, is sort of our support and resistance through the rest of the year. And if we settle outside that range, I just said if we settle above 407 and a quarter, expect 465 half late winter, early spring of 2021. And inversely, if we settle below 365 and a quarter, expect 305 to 310 over the following 2 to 3, 3 to 5 months. I do believe that's all that needs to be said. This is just an update on what's going on. One last thing I'll leave you with. If the market tops out at 407 and a quarter, it can back off quite easily to 375 half over the next or the following few weeks, where we can actually not only place a weekly low, but even a monthly low at that. And I do believe that's all that needs to be said for this particular December 20 corn futures vlog. So do yourself a favor. Fill out the free trial form on this website. Take that 2-week test drive. You have nothing to lose and much to gain.